Time to do some measurements. All right. Golden runs, angle of ascent, angle of climb, angle of descent, the dark run or the dark fall, angle of fall, all those terminologies, 12-month moving average, iron that stuff out. All right, so what do we have here? Let's start with the basic here. Right now, let's say I want to play some options and I want to see if what my strike price will be in January of 2021. So let's do that now. So what we need is TradingView, always awesome. So let's measure the current angle of ascent. Look, it's just charting. It could either go, we don't have a lot of samples right now. Could go parabolic, could increase from here, could even out. But let's just take this worst case scenario. Let's say we're in a bull run, and right now, and remember for angles of ascent, measuring angles, it's relative to a specific chart, a specific time frame. You zoom in, zoom out, you could skew. This one it's tracking right now, where you see the angle changes. So if you want to compare angle of ascent, well, you could compare angle of ascent at a specific moment here compared to here in this frame, in this picture size. If you start playing with the skewing, you see the angle of ascent changes, and they're going to change here also. So for comparison measures, always compare within a fixed, all variables the same. Don't compare to another chart. You can say, oh, look, 80% of climb. Yeah, but if I skew it super close, look at that. The climb goes up to 73. So don't get impressed by that number, but get impressed by relatively to the other angles that the 12-month moving average has decided to use back in the days. So let's see. Okay, right now I have some, I want to buy some calls. I don't know what's the strike price going to be. I want to go in the future. I believe in this silver run. So let's move up the angle of ascent. So now we know I have a 46-degree angle of ascent right here. If this continues like that. So I'm going to, and then I'm going to look at the bottom, April, June, September, October, December. Okay, right here, January 2021, right there. 42%. Let's bring that back up. 42. Oh, not 42 anymore. See, I don't have a lot of measurement right here. Eventually, you could adapt this. The earlier it is, the less probable it's going to be. Try to really overlap that line. Hold on, let me bring it back to January. January, right there. 47, January 21st. So this is my target, not for the price. This is my target for the 12-month moving average. So January 21st, 12-month moving average is going to be right here. Now, where's the price going to be? Well, what you got. Oh, can I move this? There you go. What you got is distance from 12-month moving average. And you could, if you're in a bull run, you could see where it used to do on average, what it high watermarks at the end of a bull run. You see this, the elastic for silver has a history. If it goes parabolic, it could go really fast. If you have a similar angle, let's see if you have a 49-degree angle. Yeah, where you had similar angles. Where was the angle? I see the price action was actually still, where were we? 7%, 14, 7, 10%. So if you want to be conservative, you could say that the price action will be maybe 10% away from the 12-month moving average. So from there on, you could add what would the price be right above. So right here, January 21st, and then let's add 10%. because we're going to be 10% away from that 12-month moving average for that type of angle of ascent. Let's move it up. And here's my target. So assumptions, if we're keeping the same angle of ascent, we're not going parabolic, we're just steady as she goes, price action goes up. If the price action is going to be 10% above, so if I do a little drawing, here's a 12-month moving average. Well, you can bring back the price action. Right now, the price action right here is 18% away from 12-month moving average. So let's just say we're going down, hitting that resistance, turn support, going up, hitting that resistance, going back down, hitting that 12-month moving average, going back up, busting through, and then price action ends here. That'd be my target. Then you could add other weight of evidence. You know that here you have some monthly defined resistance. Now it's going to be turn support, so we're going to probably lose some time here, consolidating under or close to it, then go up back above. Then we have some monthly defined, and what I like about this target is below some monthly defined resistance right here around, what's that level? 2350. So sometimes you get the greed, oh, I'm going to get rich. And then you think you're going to go straight to the moon. And then you see this parabolic thing, but you're not there yet. Let the 12-month moving average guide you, tell you where how fast you're going to get to that target. So it's going to, for emotion management, it's going to mitigate, or it's going to tune in your expectations. So when there's fluctuations and you're not getting there, you'll remain patient, because you know you're going to already have an estimate of the time before you reach that price target. Right now, this is how many days? This is 18 bars. This is 18 months away before we reach that target, if we maintain that angle of ascent. If it increases, it'll be faster. If it decreases, it's going to be slower. But that is the angle of ascent. So 18 months, that's a long time. So if you check daily, what's happening, daily fluctuations, it's going to kill you emotionally. You're going to sell the wrong moment. You won't be buying right and sitting tight. Like next trade points out, next big trade, and or the quote from Jesse Livermore, I believe, you won't be able to follow through that if you don't have expectations of the time frame. Use angle of ascent, check it out, push in the future, estimate, also conservatively look. If the angle of ascent increases and it goes parabolic, then the price action might be, that's crazy, like 70%, 40% away from that target. So if you really bust through, then your price target will be a lot higher. See, 21% from where the 12-month range is going to be, brings all the way here. If it goes parabolic, 30%. And silver has shown that it's able to do 30% easily. So the price action actually for your strikes, for your strike price for those calls, conservative, even if you're close to the 12-month moving average, conservative $21 strike price. Else, where we're at 10%. We'll bring back down. 10%, 23 strike price, and you're going to be in the money at that point. And if you get 30% away from that 12-month moving average, then after that, the strike price is going to be 27. So there's ranges of how fast if you're going to reach those. Are you going to, where your strike price is going to be close towards the expiry date of your calls, and also the strike price where possibly it could be in function of the distance is going to be from the 12-month moving average. So all starts from that angle of ascent, and then when you extrapolate that, gives you clues where you're going to go. And then after that, you got to make sure that bottlenecks along the way, what I call walls, remember previous support and resistance, you got to really respect that. You could sink through and you get lucky, and then you get to sell here. But that's by the end of the month. It should close here and could make you bounce on the smaller time frames around those levels. So 30% away from that 12-month moving average, which it has already done bull runs. We'll be in crazy mode right here. So in 18 months, we'll be at these at 27. 18 months, 27. Takes time, guys. Or if we're conservative, then we'll be at these lower level. In 18 months, we might be just at 2350. So don't think it's going to double in the next 2 months. Don't think it's going to double in the next 6 months, even in 1 year. Before you start, even I want to double, like bring us all the way to 1836. It's not going to double in the next 2 years. It's going to take a lot more time than that, unless we start going parabolic. And if really it goes parabolic, then if you want to double from here, 18 to 36, 18 to 36, you have to go through all that. The angle of ascent has to increase. We'll be 71% away from that. If we keep the same angle of ascent, we'll be 71% away from that 12-month moving average, but the angle of ascent won't be. The more you're stretched away, the more the angle of ascent is going to increase. Parabolic mode, if we start getting at these levels right here. So that's not to really make sure that your expectations don't break your emotions along the way. That is highly less probable than just basing the fact on right here. And the more time moves on, a few months, we'll probably get a clearer view of that angle of ascent. And you could always adjust. If the angle of ascent starts going up, here was probably 40%, and then it starts going here at I love that info line right here. Let's check it out. Here you had 45, and then here we started going parabolic, 68, and then 79. Then you could adjust. Then if ever you need to take new positions, new puts, new calls, you could adjust your expiry date, and then you could extrapolate using how far you'll be away from that 12-month moving average. You could estimate your targets that way. Emotion management, using angle of ascent to estimate targets, and it's going to keep you in line with the daily noise. You'll know what to expect. Everything has to fit together. So this is just another tool, another clue to make you more confident in your targets and when you're going to get there, and not what somebody might say on Twitter, what the target is, how long it's going to last, or whatever. So base it on facts and adapt along the way. If that angle of ascent changes, then you could take new positions accordingly, guys. All right. Hope you appreciate that, and talk to you guys later. Ciao, guys.